Okay, here we are in the account for the day. We're up 2,000, which is not bad. It's nothing compared to typical up days. Let's see what's going on in the account. First of all, the markets are up. They're flat. You can see at the top of the screen, Dow's fractional, so is the Nasdaq and S&P. But we're still beating, as you can see on our performance. We're up 0.3, whereas everything else is up 0.1 or even negative. So we're outperforming today, up 2,000. Passive income names seem to be working. The C's, our favorite holdings, are always showing strength. Seems like, and that's why they're 4-star fund. So we scroll down the list, and I already did videos on some of these holdings: Cornerstone, Gove, Riv, but we're gonna do JEPI next, and that's down today. Maybe we'll add to it since we're flat on our cost basis. You never want to add when you're too far above the cost basis. We already have 14 grand. Maybe we'd get it up to 20, like Gove and Riv. It's that high quality of a fund, and it's tied to the indexes, so it helps your performance a lot. Let's see, going down the portfolio, anything else that stands out? Everything's pretty much fractional. FCO is down only 1%. EDF is barely down, and those have been on a tear, and they have 15% dividends. Check them out. They're emerging markets. It seems like there's nothing else really noteworthy at the moment to comment on. So, all right, so what can we make a video about? Can we talk about the coming recession, the impending doom that everyone wants to tell you on the news? Should we talk about Elon Musk and his Tesla fiasco, or his trial, that he's at right now? Should we waste our time with that? Should we talk about the Sam Brinkman-Fried guy, the Bitcoin guy who had the huge scandal that has everyone's attention right now for some reason, when they've just lost all their money in crypto? Even before he was exposed as a fraud, everyone had already lost most of their money anyway in crypto. So why waste our time with that? GE with their earnings today. They had weaker forecasts. The stock's up big. That's why the stock's falling. You buy the rumor, sell the news. That's typical for GE. But should we spend more time on GE? I don't think so. I think that GE, Meta, everyone's talking about Facebook right now and how cheap it is. I think that there are other ways to play Facebook, like through the indexes, since it's a big part of the index. So, like Cornerstone right here. Facebook and Tesla, all right, should be played in different ways. Okay, look at how I've played Tesla. I don't even own it because it doesn't pay a dividend, but I have a put that I sold on it at 50, which the odds of it ever getting down to that price are slim. So I received $800 just for doing that with Tesla. I'm up 40% right now in the option, as you can see. I'm not going to take that 40%. I want the higher premium here, the $795. That's times 100 shares. That's $795. I've been talking about how to own Tesla without the risk, and it knocks down your leverage here. I had 800 more leverage, but that knocked down my margin, which lowers my interest, which frees up cash to then invest in other names that pay dividends, which, as you can see here, are about $95K per year. We make them monthly, so $95K. We make these dividends monthly. And as you can see, Cornerstone is one of our biggest contributors to those dividends. Cornerstone. Why be in the Bitcoins of the world and talk about the recessions and that are coming when the dividends just pay regardless? Doesn't matter if the stocks go up or down, the dividends come regardless. And our performance speaks for itself, up 17%. I have to say it constantly, but I have to, somehow make a presence for myself on the YouTube community. So I have to keep saying this. But I mean, hey, it's it also feels good to say that 17% versus everything else. Why? Again, I'm not bragging, but why? Why am I up 2,000? Because these passive income names work. That's why they're up on a flat day, because people understand that when you have, high inflationary environment and a scary kind of volatile market, that passive income names are the stable places to be. Last year, we outperformed the market as well. So, Anyway, also Citigroup. I'm up. I was thinking about selling some of that, just to lower my margin because it doesn't have a huge yield. It's only 4%, and we're up 8% in the name. So, I don't lose much yield, and I take a profit, and I can put it somewhere else for a higher yield. Like I can go to actually, I can sell some Citigroup and go to JEPI. That's probably just what I'll do. I'll sell some Citigroup. Okay. Well, I really do not want to part with that, but I'll tell you what. I'm gonna add to JEPI. I'm gonna add 800 just to round out my margin because I like my numbers at even numbers. So we'll add actually we're gonna do 500 to JEPI because I like it at an exact 15 until I can figure out what else to do next. Okay. By the way, JEPI, what does it offer? It offers an 11.5% dividend. That's very nice, very attractive, and it's a high quality fund that's linked to the indexes, so you won't see any surprises. So we bought $500 of JEPI. It only took up our available draw. It took up next to nothing. Our purchasing power is still intact, 500,000, because it's a high quality 30% maintenance fund. We go to our margin tab, and you'll see the maintenance here of these higher quality names, 30%. So every 1,000 I put down, 300 is taken up, and I have 700 left to play with. Versus these riskier names down here that are 100%. You see. So 100%, I don't want to have too much of my equity in those. I want them in low maintenance names that pay dividends so that I can maximize my purchasing power and bang for my buck. So these are little tricks to use leverage. I had to give you little pearls in here and get slightly off topic and make the video seemingly be about nothing in particular because there's nothing to talk about today. The headlines are all distractions, as I've made a case for, and there's nothing happening in the market. It's such a flat day that there's nothing really to report on. I will say one more thing, that the charts of the market of the S&P 500 are looking very constructive. We just got above the 200-day moving average, and that's why I'm so positive on the markets. Not only are we just at a low place on the chart, we're 20% off the high, so we're at a nice entry spot on the charts. But look, we got above the orange line, the 200-day moving average. It's now testing the 200 today as we're flat. That's a good sign that it's holding it relatively well. You could see some more consolidation around it, but look at the moving averages. They're all converging and lining up. The 200 was downward sloping for the previous year, and that's negative. But as it smoothens out and goes sideways, you can see that the trend is starting to reverse. The MACD has crossed there, and we have room on the RSI to go to 80 before we're exhausted. And so, for all these reasons, you have the Federal Reserve lowering interest rates, by the end of the year, perhaps, or at least in 2024. And the market's always 12 months forward looking. So that's, again, you buy the rumor, sell the news. What the Fed is doing with raising rates is already priced in. So anyway, there's nothing else to really say. We're still up nicely. We'll see if we hold the 200-day today, but we don't really care. These are just to time our entry points better. We really just, and I like that at an even number. So let me add something. We really just care about passive income. So let me add $300 more and just, juice out a little bit more income. Where can we add it to? What has an attractive yield that's down today? Let's see. We have FCO, 17%. I can't add to that. It's way above my cost basis. The Glow funds, they're risky. I would not add to them. But they have a large dividend, so I'm letting the dividend pay back the losses. I still wouldn't go there. I say maybe we just go to our trusty Old Faithful Cornerstone, buy an extra 300 worth. Every day you try to get, a little bit more. Buy CRF. Yeah, we have less in CRF than CLM, keeping them both in equal weighting. And if all these notes are confusing, just watch the video again. These are all pearls. It's taken me 20 years to accumulate all these little rules and factoids and tricks. So rewatch this video a few times. So we got Cornerstone almost equal weight, the NASDAQ version with the S&P version, which is CLM. So, okay, I think we've covered everything we can cover, really. I mean at this time. If you like the video, click like and subscribe, and have a good day. Thanks.